Hey everyone, it's Wolfgang. Wanted to do a video about hot recession investing ideas. So there's a rumor or a prediction of a recession this year in 2025. And everyone thinks, okay, recession, everyone loses. Not necessarily. There's some things you can do, and I wanted to present those in this video. Right now, economists are predicting, JP Morgan, for example, that bank, their economists, a 60% chance of a recession in 2025. And there's several reasons for that. There's a lot of uncertainty in the public. And by the way, in the US, 70%, 70% of our gross domestic product, that's all the trade that's going on inside the country, 70% of that is from consumer consumption. So consumers are by far the bulk of all the economic activity in this country. And there's a lot of uncertainty with consumers because of a lot of different factors. But, tariffs, trade war, the economy, what are layoffs like? How hard is it to get a job? How much do people fear quitting their current job? Those sorts of things lead to uncertainty among the public. And there's been a drop in consumer spending. It's starting to happen. And there's also a decline beginning in imports. There's been a 60% drop in cargo being shipped to the US because of the trade war. So what that will do is the remaining goods that are available there will be demand for those will raise their prices. So rising prices on substitute goods or any goods that are close matches to what consumers want, prices will rise. That will reduce the amount of money consumers have to spend on other things. So that will reduce GDP. That will affect companies who sell things. When the prices of things rise, it reduces the amount of discretionary. That's money that consumers have that they can choose to spend or not spend, depending on how they feel. And a lot of them are not going to feel wealthy enough to spend on discretionary things because of higher prices. When we have a drop of 60% of cargo coming to this country, imports, the availability of goods that people buy is dropping. And when the supply drops, the price tends to go up. And so a little bit of inflation there. This recession this year that's supposed to happen, it's being called a voluntary trade recession because fairness in world trade is being sought, is the new reality. So it's a voluntary trade reset and a recession that will come from that in an attempt to restore fair trade so that, because basically right now there's one country flooding the world with cheap goods, wiping out jobs in all other countries. And part of that strategy is to economically weaken all other countries so that the supplier of the cheap goods becomes stronger. And so the world has woken up and realized that. And so this recession that may happen this year is being called a voluntary trade recession. It's an attempt to restore fairness in trade, in world trade. So airlines are reporting a decline in travel. Southwest Airlines, United Airlines have already reported a drop in ticket sales. So consumer spending is dropping. Cargo shipments to the US is down already by 60%, 60%. And economists are predicting a 60% chance of a recession. So uncertainty, drop in consumer spending, higher prices on substitute goods, thus less discretionary spending and lower GDP. So here are some survive the recession tactics, okay? Pretty basic stuff and pretty easy to pull off too. Number one, increase your liquidity. Increase liquidity. In other words, when you think about your own personal economic situation, the idea is start noticing things you can do to increase or improve your own personal liquidity. If you're in business, collect on your accounts receivable. Try to get your accounts receivable collected and then don't spend that money. This is the most important one. Do not take on any new debt. That includes credit cards. I'm not Dave Ramsey, but in a time of recession, you do not want to be taking on new debt. That includes credit cards. There's no reason to take on new debt when we're uncertain about the future and when the prices of things are rising and we're going to have to spend more to get the same goods that we used to get for less money. So those are the survival tactics. So here are some ideas to invest in. A lot of people think, okay, during a recession, you can't really invest in too much. You're just treading water and it's hard to get a return. Actually, there are some options. High yield savings, U.S. Treasuries, U.S. Treasury bonds, municipal bonds, precious metals. We all know that gold has kind of skyrocketed lately. when when there's a recession, when the value of the U.S. dollar is declining like it is now, precious metals become attractive. And this is a really good investing idea right now, consumer staples. So a lot of people think it's hard to win in a recession to get a good investment return. With consumer staples, that's what everybody tends to keep buying in a recession. Food, beverages, including alcohol, personal care items, things you use every day, toothpaste, soap, shampoo, razor blades, etc. Consumer staples is an area to invest in a recession because those are needs. They're not wants. They're not discretionary. They're things that people will keep buying in a recession. Another investing option is in certificates of deposit, utilities and energy and healthcare. So these are all options to invest in a recession. Probably this one, consumer staples, is the most promising because there's an ETF that since 1962 has returned 8.2%. 8.2% since 1962. How many years is that? About 62 years. That's about 62 years, 63 years. So for about 63 years, the Consumer Staples Index has returned 8.2%. And the ticker symbol for one of those is XLP, the Consumer Staples Sector Index Exchange Traded Fund, XLP. And that also comes with a 2.5% dividend. And again, this is not investing advice. Consult your financial advisor. But for consumer staples in a recession, it's a good idea. So the average return of consumer staples since 1962, 8.2%. The Standard & Poor's 500 has done better. Over the same time period, the S&P 500 has done over 11% on average every year. But in a recession, the S&P 500 tends to drop because it's got a lot of different stocks in it. Consumer staples, people keep buying these things even in a recession. So food, I want to call out these items. Food, alcohol, and tobacco do especially well in a recession. Assets that sell food, alcohol, and tobacco tend to outperform in a recession. Also, Walmart, low-cost provider of stuff. Walmart has a lot of things that do not come from China. For example, food. They have a big grocery. Most of them have grocery in them now that comes from local sources. Pretty affordable food compared to other groceries. Netflix is sort of the stay-at-home recreation entertainment. People, as I mentioned previously, there's been a noticeable drop in airline bookings, right? But people will spend on Netflix. So Walmart and Netflix do well. Food, alcohol, and tobacco. And all of these things, especially consumer staples, are options for investing in a recession. So there's a couple things you should avoid in a recession. Okay, technology stocks. Technology stocks have been very volatile lately, and they've dropped. A lot of them have dropped and are not doing too well. For example, the NASDAQ 100 has a lot of tech stocks in it. So I'm not saying if you have stocks, tech stocks, you should sell them. I'm saying don't put new money into tech stocks because the trade war is sort of in the early phases. A recession we may end up having a recession. I would not put new money. If you have new money to put to work, I'd recommend one of these choices and not technology stocks because it's just so hard to predict which of those companies will come out of the recession well. And by the way, in a recession, he who has the most liquidity thrives. So survive the recession tactics, increase your liquidity. Whatever you can do to convert assets to cash or cash equivalents, high yield savings, any of these things that are easily converted to cash, you should focus on those. And for investing purposes, consumer staples, I gave you the name of an ETF that has a nice dividend return. So the one thing to keep in mind, okay, in a recession, if you decide to put new money to work in these lower risk, more liquid types of assets, just remember it's a lower return than you might get in the S&P 500 over the long term anyways, but it's only temporary. This is only temporary. Eventually, the challenges that the world economy is facing right now will be behind us. And then you can easily redeploy, you can convert these liquid assets into more risky assets like stocks if you invest in stocks. So there are some careers that are more prone to layoffs than others in a recession. Retail, both online and brick and mortar retail, is going to be affected by the recession and by the drop. When there's a 60% drop in cargo being shipped to the U.S., when those imports are being reduced, you can expect layoffs in retail. That's true for online retailers and brick and mortar. Last mile delivery, there will be less consumption. Consumers are going to be spending more for substitute goods. There's fewer goods, prices go up, consumers have less money to spend on other things. So last mile delivery services are going to be hurt. Logistics and shipping is going to be impacted by a slowing economy. Travel and leisure are definitely going to drop. They already are. I mean, Southwest Airlines and United have already announced they're seeing a drop in bookings. Travel and leisure expect to see layoffs. Warehousing, same thing. When people buy less, there's less need for warehousing. So those are some of the careers that are going to be impacted by the recession. It's short term. If you focus on liquidity, he who has the most liquidity thrives in a recession. So that's what you should try to focus on. If you do have new money to put to work, you should probably avoid tech stocks. Even if you really like tech stocks, which I personally do, I've done very well with those over time. I'm not putting any new money in tech stocks, in tech stock ETFs. Like the QQQ is an exchange traded fund with a concentration in technology stocks. I'm not putting any new money into that ETF. It's the NASDAQ 100 exchange traded fund. So if you have any questions about any of this, there are investing options in a recession. Whether there will be a recession or not, it's not clear. It's very hard to predict recessions. Historically, it's been very difficult to predict recessions. And hopefully we won't have one, or it will be shallow and short. But you sort of get the idea. There are some options. I wanted to let people know you do have some options to put new money to work in a recession. And these are just some ideas. So if you have any questions about these, please post questions in the comments and I'll try to answer. And I really want to thank everyone for watching and have a great day.